All right, so today we are doing a deep dive into all the buzz around spot Bitcoin ETFs. We've got some fascinating analysis from Fred Krueger, thanks to the Rely Bitcoin podcast. It's going to be a wild ride, so buckle up.
What I find so intriguing about these spot Bitcoin ETFs is how they've caught the eye of those big institutional investors. And it's not just about making it easier for them to invest, it's about tackling those big concerns that have kept them on the sidelines for so long.
Okay, so walk me through this. What are those concerns exactly, and how do these spot Bitcoin ETFs address them in a way that's got these big players so interested?
Well, you have to remember, institutions have a lot of responsibility, right? They have to answer to a lot of people. So things like security, custody, and transparency are absolutely essential, non-negotiable even. And that's where spot Bitcoin ETFs really shine. With their regulated structure and clear holdings, they tick those boxes in a way that just wasn't possible with directly buying Bitcoin.
That makes sense. It's like creating a safe, familiar on-ramp for these investors who were hesitant to even approach the highway before. And speaking of on-ramps, Kruger seems to believe that these spot Bitcoin ETFs are fueling an entirely new kind of bull market for Bitcoin.
Oh, absolutely. And he's not the only one. This term Bitcoin bull market 4.0 is really gaining traction. And the most interesting thing is that it's not being driven by the usual suspects. Remember the ICO craze or all that hype around DeFi. This time it's different.
Okay, now I'm really curious. What sets this bull market apart, aside from the ETF factor? Give me some historical context.
So if we think back for a second, previous Bitcoin bull markets were primarily driven by us regular folks, retail investors, jumping on the latest trends. And, well, we know how that usually ends up those wild boom and bust cycles. But this time around, it's institutional money leading the charge. And historically speaking, institutions tend to play the long game. They do their research, develop their strategies, and they're in it for the long haul, not just a quick buck.
So instead of a bunch of individual investors driven by, let's be honest, emotions, we have these giants with deep pockets and long-term strategies entering the scene. That has to have some significant implications for volatility, don't you think?
You're absolutely right. But before we get into that, there's another layer to Kruger's analysis that we need to unpack, this power law model and how it applies to the history of Bitcoin's price. Remember that 97% correlation we talked about? That's where things get really interesting.
Okay, now you've got my attention. Let's talk power law. What is it, and what makes it so relevant to Bitcoin? So, this power law thing, it's not some crazy math concept, right? You got a real-world example to help me wrap my head around it.
Okay, imagine a video going viral, right?
Yeah.
Starts slow, a handful of views.
Yeah.
Then a few more, and bam,
Hmm.
explodes across the internet. That's the power law of slow growth that suddenly snowballs into massive growth. Exponential.
Okay, I'm starting to see the Bitcoin connection, but how does Kruger actually apply this to something as volatile and unpredictable as cryptocurrency?
Data crunching, my friend. He took this power law model and overlaid it onto Bitcoin's price data, going way back to the beginning. And get this, he found a 97% correlation. 97% between what the model predicted and how Bitcoin's price actually moved. That's crazy accurate, especially with finance.
97%. All right, now I understand why everyone's freaking out about this. So what's this scarily accurate model tell us about where Bitcoin might be headed?
Well, according to Kruger's power law analysis, we're still in the early innings of this bull market. He even throws out a prediction. $100,000 per Bitcoin, maybe by the end of the year.
Whoa, whoa, whoa. Before anyone empties their savings account, let's remember, it's just one model, right? Not a guarantee.
You got it. And Krueger would be the first to say that. Predicting the future, especially with something as wild as Bitcoin, it's impossible to be 100% certain. But his analysis gives us a really compelling framework, right? Helps us understand how Bitcoin has performed in the past and what its potential might be.
It's like you always say, past performance isn't a guarantee of future returns. Okay, but let's say I'm convinced, even with that disclaimer. What's Kruger's advice for someone maybe feeling a little FOMO right now? Like, gotta buy in before it's too late.
That's where Kruger's wisdom really comes in. He's very clear. Don't try to time the market perfectly. It's tempting. But even the pros, they don't get it right consistently. Trying to buy at the absolute bottom and sell at the absolute peak, it's almost impossible.
So what's the alternative? If chasing those highs and lows is a recipe for disaster, how do we handle a market as crazy as Bitcoin?
Dollar cost averaging? Kruger's a big fan. Instead of going all in or all out, you invest consistently over time. Ignore the price. Just stick to the plan.
So if the price takes a dive, don't freak out and sell everything. Maybe even see it as a chance to buy more at a discount.
Now you're getting it. Volatility is part of the game with Bitcoin. It's not a bug, it's a feature. And those dips, they can be your friend if you're playing the long game.
What goes down must come up, right?
Yeah.
But seriously, sounds like understanding what gives Bitcoin value is key to handling the roller coaster ride. So, what is it? Hype or something more? So, we've talked about not trying to time the market, dollar cost averaging, riding out that volatility, but what actually gives Bitcoin its value? Is it all hype or is there something more underneath?
Now there's the question, right? It's something that even people who've been in the game for years still debate. Because unlike your dollars or euros, Bitcoin isn't backed by a government, and it's not tied to some physical commodity either. Its value, it comes from a few different things all working together.
All right, I'm listening. What are these mysterious factors that give Bitcoin value? What makes it more than just code?
Well, first off, you got to look at scarcity. Bitcoin is limited. Only 21 million will ever exist. That digital scarcity, it's built right into the code, which is totally different from regular money, right? Governments can just print more whenever they want.
Right, like that digital gold thing I've heard people say.
So,
But there's got to be more to it than just being scarce. Yeah.
exactly. The other side of that coin is demand. The more individuals and institutions see Bitcoin as a store of value, a hedge against inflation, maybe even a new way to pay for things, that demand just keeps growing.
And when demand goes up and supply is fixed, Econ 101, prices go up. But let's go back to Krueger's point about these spot Bitcoin ETFs actually impacting Bitcoin's crazy volatility. That really got me thinking.
It's a big claim, but Krueger makes a good case. Remember how he said institutions are playing the long game? They do their homework. They don't just freak out and sell at every little dip like we sometimes see.
So instead of a million individual investors hitting the panic button every time the price goes down, we'll have these big institutional players keeping things steady. Almost sounds too good to be true.
Well, it's not that simple. We got to remember, Bitcoin is still relatively new, and a lot can affect its price regulations, new technology, even what the media is saying.
So while these institutions getting involved through ETFs could make things a little calmer, it's not a magic fix. Bitcoin's wild ride might not be over just yet, huh?
Exactly. Which leads us to something for everyone listening to ponder. If Bitcoin does become more stable, more mainstream, does it lose what makes it special? That whole disruptor identity, the challenge to the old way of doing things.
That's a great question, and only time will tell, I guess. Will Bitcoin become a digital version of gold, stable and valuable, or will it hold on to that unpredictable side, those wild swings?
Either way, one thing's for sure, Bitcoin has got the whole world talking about the future of money, and we're only just seeing the start of its impact.
And on that note, we'll wrap up this deep dive into spot Bitcoin ETFs, institutional investment, and Kruger's fascinating power law model. Big thanks to Fred Krueger for giving us so much to think about. Keep those brains engaged, everyone, and we'll catch you on the next deep dive.